Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so markets yesterday had a pullback day. Yesterday in the Game Plan, we went over two trend lines, a retrace to the scene of the crime, as well as an upsloping, ascending trend line that were coordinating, creating an X where price hit on Thursday, which was the last trading day of the week. Last week, obviously going into the holiday. Now, what we saw over the weekend and into yesterday was more tariff and trade news, a lot of tariffs being announced at 25, 30, and even 40% that will go into effect on August 1st if no deals are reached by various countries. Now, remember that originally when this started on Liberation Day, there was a reprieve that was given after the markets collapsed. It was a 90-day reprieve. The idea was 90 deals in 90 days. I think we have maybe 2 or 3 deals that are done. So the idea that these deals are all going to get done by August 1st are probably pretty small, the chance of that. So we have to start to say, okay, does this then start to breed worry and defunding of the market, if you will, or taking profits out of the market? And obviously the charts will help guide us, but let's get into the charts right now as we go. So this is the S&P 500 here, guys. The S&P futures, again, this was yesterday. So we opened slightly down yesterday, had a consistent sell-off all the way. Notice the final flush. This is very, very common in markets where we see a big flush and then the selling is over for the day. And again, if you look at this, this was the biggest down move over 2 10-minute candles that we had during the day. And that, again, ended it. And we had a little bit of a snapback into the close. Overnight, we started to trail off a little bit in the after hours and then slowly ground higher throughout the course of the overnight into this morning. Right now, the S&P futures are showing us that we'll likely open up just under 10 points higher. So a little bit, and I stress a little bit, of a retrace of yesterday's down move or a bounce off of yesterday's down move. Now, going into the charts, these are the two trend lines that we looked at yesterday, folks. So again, you can see this one here, this one sloping from this pivot low to this high. And then this was the big one. This is the one, in fact, let me throw this in a different color because I think, again, it is warranted. This was the retrace to the scene of the crime with the break and the retrace right into that X marks the spot and the pullback. And again, what I said yesterday is, listen, one day doesn't mean we're going to correct. What we have to watch for, we knew the level was there. We got to pull back off of that level. Now the question is, does it continue? Or is it more like this one where we just go sideways, meaning essentially price gets away from those two trend lines? And then even if it's just sideways to slightly down, it has more room to run to the upside to get back to that upsloping retrace level. And again, we don't know yet. I mean, just being honest with you, even I don't know that. Now, do I think the markets have a valuation that is concerning? Yes, absolutely. There's no one out there with common sense that doesn't say that the valuation on the market is stretched, especially with the 10-year yield starting to go higher and higher and higher. And this is something that is really concerning. Generally, markets and the 10-year don't go up together. All right. Usually when the 10-year yield goes up, it means people, number one, have an alternative investment where they can make more money by pulling it out of the market and putting it into a bond, for instance, the 10-year bond paying now 4.4%. So it's very rare. Usually these things work opposite of each other. Yet lately, we've seen them working together. And that, again, is something that we have to monitor. So if we flip back to the charts here and we go to the 10-year yield, look at what has happened just since we broke. So here was a great trend line, and we talked about this over the last couple trading days in the game plan. You had the 10-year yield hitting this support, then this one here, all along this trend line. Beautiful trend line, by the way. It breaks down and then comes back up, kind of pauses, and then pushes yesterday through. Continuation today. In fact, the 10-year yield is now approaching 4.43%. Now, what's interesting here, and this could be the biggest factor or the biggest kind of heads up in this market, is that after Liberation Day, remember, generally Liberation Day caused a stock market sell-off. Markets, again, were pricing in high tariffs, and that would slow the economy. most people thought yields would go down in that scenario, right? And that would get the markets to bounce back up, right? Yields falling, again, pushing more money back in. The idea of yields falling means a slower economy, more rate cuts by the Federal Reserve. Instead, after Liberation Day, we saw yields shooting up as other foreign governments that buy a majority of our debt, they said, no, 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 no. If you're going to slap us with big tariffs, we're just going to not buy your debt. We're going to start to diversify away from the US dollar dominance and your treasuries. Well, here we are with new, essentially tariff rates that were higher than what's been on for the last 30, 60, 90 days. And rates are starting to go higher again. And that is concerning here, folks. Again, rates going higher, that means less potential cuts by the Federal Reserve are being factored in, but also more importantly, other countries, other buyers of the US debt may be taking a step back because of the uncertainty and the escalation of these tariffs. All right, now just a reminder, I always like to say this, the Federal Reserve does not control the 10-year yield. The Federal Reserve controls the short end of the yield curve, meaning the 6-month, the 3-month, very, very short. I mean, essentially the overnight lending rate, et cetera, right? Those are the ones they're going to control. The 10-year, the 20-year, and the 30-year are controlled by the markets. And so again, while the Fed can maneuver rates on the short end, and that generally does have an impact on the longer end of the curve, it doesn't always control it. And that's important because listen, the Fed could cut rates, 100 basis points. And in theory, the 10-year yield could not go down at all. It could go up. And that's something we have to be aware of. All right, let's get back to the charts here, guys, as we continue in. The dollar getting a bounce back. So here we had a breakdown on the US dollar. It's now retraced to 97.70. Remember, this is your key level of resistance. This is your big test on the dollar. All right, we'll keep an eye on that. Couple stocks in motion that I'm keeping an eye on. You got to talk about Wolf here. Wolf was one of my favorites a while back. I traded it multiple times for big gains with members on big pops. Then this stock went down, down, down. I stayed away from it as soon as I heard they might be looking to file bankruptcy. They did file for bankruptcy. Recently, they just named a new CFO. The stock has gone parabolic off of this. This is a great example of essentially what you have in a extreme bull market, meaning that investors, number one, this is short covering. There's a lot of short squeeze going on here. And look at where it's trading pre-market, even up here. But a lot of investors are willing to speculate, even though with the debt of Wolf Speed, likely shareholders will be wiped out of all the money that they've invested. But again, during these periods of extreme jubilation, people will be willing to jump on board here, even though the end game here is probably when the music stops, this stock goes back to sub $1 or even lower. But again, great move up on Wolf Speed. I had to mention it today. On a technical analysis basis, it is now into a lot of resistance here, though again, during short squeezes, that doesn't necessarily mean anything. But notice these lows here, and there's a gap fill right there, right here, and that's where price is currently trading right around that level. So all of this is going to be big. If it continues to squeeze, this would be your next big level, this gap fill at 538 above here. I mean, again, that's still quite a ways away, but just be aware the stock was 38 cents. It's now trading in the pre-market around 335. Amazing, absolute amazing move. Now, a couple other stocks I want to bring to your attention today. I always try to bring some alpha in terms of trade ideas, both on the swing trade and the day trade side. Carvana. So Carvana's market cap is now approaching that of Ford Motor Company. Now, again, that by itself doesn't mean a whole lot other than that the company is getting to be a big by market cap size. But this trend line is catching my eye. High pivot, and high pivot. And we're just about there, somewhere around 364 today, maybe 365. It will hit that level. In addition, I always look for a confluence of levels, right? So when you're doing technical analysis, one level is great, but one level, 60, 65% success rate. A lot of people out there would be very happy with that. I am not. I want 70 to 80% success rate. Can you get above 80? Yes. If you find like 4 or 5 factors, maybe 85. But again, beyond that, I don't know. I mean, I'm skeptical that you can even get beyond 85, 90% success rate, right? I mean, that's especially when it comes to swing trading. Day trading, you can. Day trading, and you absolutely can. At least I have done that, as have my traders in the live day trading room. But again, we're using very short periods where we're in and out. Once you start holding stocks on swing trade bases overnight, you run the risk of bad news coming out, something happening geopolitically that can affect. So there's a lot more risks that occur when you hold a stock longer than just seconds or minutes during the intraday period. But going back to this Carvana chart, not only do we have resistance at 364, 365 area, but if you go to your bigger time frame, you are now approaching your double top at 376, right? So you're really getting into a confluence of factors here where this trend line is now extending out. And again, so somewhere between, let's say, 365 and 376, there's going to be a double top and an upsloping trend line. That, to me, gets my attention for a potential pullback in the stock. Now, JP Morgan is selling off today, guys. JP Morgan, look at this, guys, came right into this level, pierced briefly, and is now coming back in. The stock is trading lower this morning again. If we go to the 10-minute chart, you can see a nice little sell-off here in the early hours. The valuation on JPM is so far above its counterparts of Citigroup, Bank of America, Wells Fargo, that it's getting a little ridiculous. And I think, again, you look for a correction on this based on this extreme move to the upside. You can see, again, longer-term upsloping trend line, which we pierced but are now recovering and pulling back from. But again, this to me looks like a pullback. The stock up 50% from the April 7th lows. And again, lots of negative divergences across the board. Another area I'm keeping a very close eye on. Take a look at Baidu. These are China stocks, guys. I've noticed that they're starting to wake up. China stocks being Baidu is one of them, one of my favorites. In fact, I have it with my swing trade members at Smart Money Stocks and ETFs. And again, what we can see is your high here from 2021. The stock was $355. Come down, high pivot, looks to be a potential breakout here, guys, on this chart. You could also make a case for potentially a shoulder, head, and shoulder, inverse head and shoulder pattern formation. Either way, these to me look like they're waking up. Another way to play this would be the K-Web, which to me also has a nice dip, rally, consolidation, probably moves up, still has to break through this longer term trend line around $38 or so. But again, look at where this was back here and look at this tight consolidation. We would call this an ascending wedge pattern. If it can break this 38 level, this should go sizably to the upside. And again, valuation wise, listen, I mean, I'm a technical guy through and through. You guys know that, but I do pay attention to fundamentals on that side, on valuation. And granted, China has a lot of issues. The US and China are not on amazing terms, but you compare, let's say, Baidu, which is the Google of China, to Google itself here, or Alphabet in the US, and Baidu's trading at a forward PE of like 7 or 8. I mean, it is low. So again, a lot of these other China stocks comparatively to these stretched valuations. I mean, you look at Meta, you look at NVIDIA, some of these metrics, 30 PE, 40 PE, kind of in that vicinity. And then you look at some of the China counterparts and they're trading at 7, 8 forward PEs. And again, there is obviously additional risk. I think we have to make sure we mention that, because every investor has to understand the first thing as a trader that I look at, in fact, is the risk, right? I have to look at the risk, then look at the reward. I always look at risk first, because if you look at reward, by the way, you start kind of salivating. You're like, oh man, this could go up, 10x, or this could go up 5x. Oh, this is great. I got to do this. And you kind of push the negatives under the rug, right? And you don't want to do that. So always look at the risks first. So you fully digest the risks, then you look at the reward. It's a common mistake that a lot of investors make. They look at the reward first and they get wrapped up in, oh, this could be, this is like a meme coin. It could go up 100x, 1000x. And then they're like, oh, well, screw it. I don't care about the risks. The reward is just so delicious, right? So anyways, just my 2 cents there on that factor. All right, let's go on to a couple others here, guys. Let's take a look at Bitcoin. If we look at Bitcoin, we can see, again, it is up a little bit today. Stock market's up today. Yesterday, stock market was down. Bitcoin was down. So you're still seeing it kind of trade along the risk asset side of things. However, I do think that this is a little bit of a bullish consolidation pattern. You can see the green, the wide range green bar here, the follow through the next day into this line. And as long as you hover right on this, I would still give this a slight bullish bias, at least up to double top here, maybe even up to the 113, now 114 area. So again, just keeping an eye on that overall. Now, if it does fail and starts to break, first minor support will be 105, 105,000 that is, and then the bigger support will be 100,000 right here. A flat horizontal, an ascending trend line merging right there. Gold, we talked about gold potentially trying to break down yesterday on the risks of trade war, escalation, tariffs, etc. We did see this recover, but look, it's coming down again today. And again, I talked about this before, is yes, you have a wedge here, but the more this hits this line, the weaker this line becomes. And if we really break below, and we have a daily close with confirmation below 33.15, I think we are headed down towards about 3,100 on gold. That becomes a bigger parallel here and actually a good buying opportunity. So again, listen, as a long-term investor, I'm still in gold. I'm still a huge believer in gold longer term. I mean, how do you not love gold? And I can listen, I understand loving, listen, I love Bitcoin longer term too. Now, shorter term, it concerns me. It's a risk asset, and the elevation of the stock market is obviously at all-time highs. But gold, when you see the new spending bill adding another 3.5 trillion, I mean, really, the Doge cuts turned out to be not a non-event. That whole thing was just kind of more for show, in my opinion. The government just can't get away from spending money, which is dilutive to the US dollar, right? So if you're diluting the fiat currency that is the main currency of the world, and most other countries are doing the same, how do you not go to more store of value places where you can't just create it out of thin air, essentially? I think that's the key. So in any case, longer term, of course, I love gold. Of course, Bitcoin, assuming quantum computers don't do whatever they're going to do, that's the only small concern in the future about it. But again, listen to Michael Saylor. He talks a big game there. He thinks that it'll be fine. So we'll go with that in the near term. All right, couple other charts here. Silver was on the verge of breaking out. It did close above on last Thursday's time frame. Friday, it did not, or excuse me, Monday, yesterday, it did not confirm. Today, it's down again, but it's still holding the line. So listen, it's not a confirmed breakout. It's still got a question mark there. But again, at least it's holding this trend line here. That's very, very important. I still remain bullish on silver. I still like it quite a bit. We can check in on palladium today just for one extra. Palladium daily chart here. Let me bring up my other palladium. I have other trend lines here. Bear with me here. This one here. There we go. So you can see palladium broke out above this area and this area. It's now consolidating. As long as it holds this area, I would actually be a buyer if it comes back to about 1065 right here, 1065. So again, this would be, for me, longer term trend line, 1 hit, 2 hit, 3 hit, breakout. And then if it retraces down here, I think you buy it. At least I'm going to be looking to buy it for the next leg up. I still like palladium and platinum overall. Oil today, let's take a look at oil. Oil is still holding inside of its bearish potential formation here. Big down move is your flagpole. Upside down flag is a bear flag. There you see it very clearly. And again, sideways chop inside of here. As long as it stays in here, the ultimate end game would be eventually to assume, based on probability of this pattern, that a breakdown would occur. You'll have some support at 64, but eventually I think it's going down here to the 53-ish area, the bigger parallel, right? So we have this bigger parallel here. And again, you have to think that eventually it tests that low around $54, $53 a barrel. Lastly, natural gas. Natural gas continues. Let me get my RSI off there. It continues to hammer on this line. The more it hammers on the line and doesn't bounce significantly, the more likely it breaks down. So keep that on your radar. Again, no trade for me here, but I'll be waiting patiently around the 309 level to reevaluate. Not necessarily buy it there. I'll have to reevaluate. Remember, every trade level that you have today, there is no guarantee that it will be as good tomorrow. It's a big lesson for the day in the game plan today. You must always reanalyze. Some people say, oh, Gareth liked XYZ 6 months ago at this price. Yeah, I did. Absolutely. And if it didn't hit it during that period, then it's no longer valid. You have to go back and reevaluate. This is where time counts come in, things that have cycle impact. And so you have to always be looking, because patterns can adjust. A bear flag can be negated. And obviously, if you're looking for a bear flag that then eventually floats up and fills a gap, Well, if it doesn't fill the gap there and then the bear flag fails, well, obviously now you don't like it at that same level at that point. And so these are little things that as a trader, they will make a huge difference on your trading career when you're analyzing charts. And that's what verified investing is all about. Our new slogan is no BS, just charts. So again, folks, no BS here, just charts. What are the charts saying? Doesn't mean I'm going to be right. It's what the charts are saying is the highest probability outcome. That's my job and our job here at Verified Investing to alert you to, and then you guys make your own decisions. All right, guys. Thanks so much for tuning in. Really appreciate your time, as always, sticking with me here in the 9 o'clock hour Eastern time. I'll talk to you soon.